For the first time, benchmark U.S. oil prices have crashed into negative territory, meaning producers are now paying buyers to take it away. In a massive one-day drop, West Texas Intermediate fell from about $17.50 a barrel to below zero. It was trading at around $60 a barrel at the start of the year. Global demand has plummeted because of the coronavirus-related lockdowns and travel restrictions and fears over a lack of storage space. This is despite continuous attempts to counter the havoc in global energy markets. Well, earlier this month, Russia and Saudi Arabia agreed to an unprecedented cut in output of almost 10 million barrels a day to try to boost virus-hit markets. Anish Kapadia is Director of Energy at Policy Advisors, an independent research provider in the oil and gas industry. He joins me now by Skype from London. It really was a perfect storm. We knew of the tensions within the OPEC, the extended OPEC group. They only came to a solution just over a week ago. And of course, it's the lack of demand. How tenuous a situation are we finding ourselves in now?
Good evening. Clearly unprecedented times at the moment in terms of the wider global market, but for the oil market as well. I think we're in a situation that we've never seen before in that, especially at the moment, we're having massive impacts to global demand growth, probably around 30-odd million barrels a day of demand being impacted globally, about a third of global supply. And that combined with currently no OPEC cuts being in place. Actually, the OPEC deal that broke down, this is the aftermath of that, the taps being opened, means that you've just got a huge amount of supply coming onto the market at a time when demand is completely down in the dumps. So that's the fundamentals. And then there's a further impact that there's a nuance that the WTI contract is expiring today. So the people that own those contracts are scrambling to actually get rid of that crude now, because they're worried that when it's produced in May, that there'll be nowhere to store that crude. There'll be nowhere to take it because storage is filling up.
Obviously, part of the lack of demand, all of it because of the coronavirus outbreak, but already we're seeing countries that are slowly lifting a lot of their restrictions, which will have an impact on the use of oil. How much time do you think there is before that begins to happen for some breathing space when it comes to storage of oil?
So I think there's two effects in terms of demand. There is the temporary effect that we're seeing at the moment, which is the predominant effect. So the people being stuck at home, unable to drive. You've got big falls in gasoline demand. There's a lack of demand for products. So you've got a fall in diesel demand, and then there's not a lot of flights taking place. So there's a huge amount that has been stopped at the moment. A lot of that demand will come back, and that will come back slowly as lockdown is eased. There will be some larger, longer-term legacy effects. A weaker economy, for example, GDP growth is very correlated with oil demand growth, that you'll start to see continuing for the remainder of the year. I think the more important thing is, from a supply perspective, what you'll also see is that some of this supply that comes off the market won't come back on the market again. So demand, there is a big negative impact at the moment, but eventually demand will recover over the course of the next 12 to 18 months. However, some of that supply that comes off the market in places like the US, wells that are uneconomic at the moment, a lot of those won't come back online. Which is why when you look at the futures price, you see futures pricing significantly higher than where you are even next month.
The historic sort of news line right now is that the benchmark U.S. oil price has crashed into negative territory. So that's the benchmark U.S. oil price. What is the situation looking like elsewhere in the world?
Yeah, so oil prices vary all around the world. They vary for reasons of the quality of the crude, so how desirable that crude is, but also the location. So in the US at the moment, there's clearly a lot more supply than there is demand and storage. if you look at probably the more widely traded benchmark Brent, that's still trading in the 20s. It's a very low price in historical terms, but it's still a reasonable oil price. So I think that's more reflective of where supply and demand are coming out at the moment. But needless to say, I think oil prices are going to stay very weak for the next month or two until you see the impact of both demand recovering as restrictions are lifted, but also we've got big cuts to come from the OPEC Plus agreement. They'll start to come through in May, and that should help ease some of this oversupply as well.
Was an element of this predictable, or were you also surprised to see the benchmark U.S. oil price crash quite the way it has?
Well, I think it has certainly taken people by surprise. I think there's been some talk out there of oil prices in certain regions. Certain regions have turned negative. Places like Canada, places where the oil quality is low and there's very little storage, certain grades of crude had turned negative already. I think that this is due to a combination of the expiries coming up today, so it's limited volumes, it's low liquidity, but it's on a benchmark crude, so it grabs all the headlines. The actual physical volumes of crude being traded at this price are pretty low. And as I say, the more widely traded benchmark Brent is still in the 20s.
Anish Kapadia, Director of Energy at Policy Advisors. Sir, thank you for sharing your views with us. And now let's cross to our White House correspondent, Kimberly Halkett. Kimberly, the White House, of course, will be watching all of this very closely. What more can you tell us about any reaction that we might have had?
Yeah, the White House has not officially reacted to this news. It has been breaking rather dramatically, though, here in the U.S. in the last hour or so. But I can tell you that this is not the news that the president wants to hear, because the president, even some of his critics, were touting what they believed was his success just a week or so ago in sort of scoring this deal, if you will, to try and tamp down this oversupply in the markets. There was that conference call between the U.S. president, the Russian leader, the Saudi crown prince, where they thought that they had been able to cut production rather significantly and deal with this oversupply. The U.S. president, for his part, had at one point even looked at this as an issue of national security for the United States. So the feeling was that everything was going well. This was enough to calm the markets. This was going to help the energy industry, and also that this was going to help the U.S. economy. Of course, we've seen all of that change in just the last few hours. And that, of course, is going to make the U.S. president rather nervous, and just adding to the concerns for this White House, because it has been trying very hard to get the economy reopened as a result of the global pandemic, even starting the first phases of lifting some of the social distancing that has taken place in terms of stay-at-home orders. This is not the news that the president is hoping to hear. He had really looked at May 1st as a key target date for trying to reopen the economy. And we know that in terms of this oversupply that exists when it comes to capacity, which is what is really triggering the nervousness in the markets, that we hear that early next month is that target date when those sort of supply will hit the limits. And that is going to be a real problem for a president who is trying to reopen the economy in the U.S. at the very same time.
Absolutely. And Kimberly, while all of that is going on, there's also ongoing scrutiny over the coronavirus testing in the U.S. because the death toll there, of course, keeps rising.
Yeah, the death toll, according to the numbers, and I was just checking them right before we came on, in terms of infections, we have 766,000 in the United States, the deaths topping 40,000 in the United States. And of course, that is continuing. But as we talk about the economy, we talk about new infections. The problem is, here's what the governors are telling this White House: we don't have enough tests in order to feel even confident about reopening our economy. The White House, for its part, is insisting, look, we're getting you the test that you need. The infrastructure is being built. It's sort of happening in real time. We should have 5 million tests by the end of this month. But you do the math, there are 330 million plus people in this country. If you're trying to get everyone back to work and you've only got 5 million tests by the end of the month, that's a significant shortage of diagnostic tests. So what we see is the vice president talking to some of the governors today, trying to assure them that there will be an increase in capacity. The Defense Production Act is being put in place to try and get up to 20 million tests. But again, looking at the math, 20 million, 330 million people, a significant shortfall. So this is really just adding to the problems for this White House. They're going to have to answer for them. The briefing, 21 GMT, where they're going to be talking about tests, but they're also going to be talking about the instability in the oil markets as they try to deal with this and the reopening of the economy, a high priority for this president.
Absolutely. We will, of course, be taking that news conference live here on Al Jazeera. It'll be interesting to see what the president says about all of these issues.